The RBA keeps rates on hold and keeps buying government bonds. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at what's happening from the Reserve Bank. They haven't really raised rates, shocking no one. So, statement by Philip Lowe, the Governor, Monetary Policy Decision. So, at its meeting today, the board decided to maintain the cash rate target at 10 basis points and the interest rate on exchange settlement balances at 0%. Continue to purchase government securities at the rate of $4 billion a week until at least mid-February 2022. So the Australian economy is recovering from the setback caused by the Delta outbreak. High rates of vaccination and substantial policy support are underpinning this recovery. Household consumption is rebounding strongly, and the outlook for business investment has improved. The emergence of the Omicron strain is a new source of uncertainty, but it is not expected to derail the recovery. The economy is expected to return to its pre-Delta path in the first half of 2022. Leading indicators point to a strong recovery in the labour market. Job advertisements are at an historically high level, and there are reports of firms finding it difficult to hire workers. Wages growth has picked up, but at the aggregate level has only returned to the relatively low rates prevailing before the pandemic. A further pickup in wages growth is expected as the labour market tightens. This pickup is expected to be only gradual, although there is uncertainty about the behaviour of wages as the unemployment rate declines to historically low levels. Inflation has increased, but in underlying terms is still low at 2.1%. The headline CPI inflation rate is 3% and is being affected by higher petrol prices, higher prices for newly constructed homes, and the disruption in global supply chains. A further but only gradual pickup in underlying inflation is expected. The central forecast is for underlying inflation to reach 2.5% over 2023. Housing prices have risen strongly over the past year, although the rate of increase has eased over recent months. Housing credit increased by 6.7% over the past year, but more recently, the value of housing loan commitments has declined from high levels. With interest rates at historically low levels, it's important that lending standards are maintained and that borrowers have adequate buffers. Globally, bond yields have declined over the past month due to concerns about the Omicron variant. The Australian dollar exchange rate has depreciated and is around its lows of the past year. Financial conditions in Australia remain highly accommodative, with most lending rates around record lows. At its February meeting, the board will consider the bond purchase program. By mid-February, the RBA will hold a total of $350 billion of bonds issued by the Australian government and the states and territories, with these holdings providing significant support to the economy. In reaching its decision in February, the board will be guided by the same three considerations that it has used from the outset of the program: the actions of other central banks, how the Australian bond market is functioning, and most importantly, the actual and expected progress towards the goal of full employment and inflation consistent with the target. The board is committed to maintaining highly supportive monetary conditions to achieve its objectives of a return to full employment in Australia and inflation consistent with the target. While inflation has picked up, it remains low in underlying terms. Inflation pressures are also less than they are in many other countries, not least because of the only modest wage growth in Australia. The board will not increase the cash rate until actual inflation is sustainably within the 2 to 3% target range. This will require the labour market to be tight enough to generate wages growth that is materially higher than it is currently. This is likely to take some time, and the board is prepared to be patient. So there we have it, everyone. The cash rate has not increased. I do not have to update my cash rate chart. I'm purposely seeing how long I can go without updating this chart now. But let's have a look at the RBA rate tracker. And we can see here, this is the 7th of December. No change was 53%, decreased to 0% was 47%. So we'll have to, so the no change were right. The no change have been right the whole time, even though, well, the market is telling us something else. So what do you think, everyone? Are you at all surprised that the RBA is doing this? Well, let's have a bit of a talk. I don't think any of us trusted the Reserve Bank to not increase rates before 2024. At the very least, the banks are already increasing rates. We're seeing fixed loans going up higher and higher and higher. Significant increases now up to 50 basis points. They're still buying government bonds. Government's still increasing the debt. That will all have to be taxed out of us eventually. There you go, guys. We'll have to wait and see what happens in February. Do you think the Reserve Bank will actually increase rates? Do you think we'll actually see wage growth here in Australia? And what about inflation? We're certainly all feeling it. I'm certainly feeling it at the petrol pump. You let me know your thoughts, opinions, and predictions in the comments down below. But it certainly will be interesting next year. Remember, we've got an election. And with an election comes, one or two little promises, guys. Anyway, thanks for watching. And check out this video here discussing, well, hang on, the protester class warfare, everyone, in Melbourne. Don't believe what the media has to say. Take care. I'll see you next time.